If you operate a childcare centre in Australia, you are running a business in one of the highest demand sectors in the country. Structural undersupply of quality childcare places, increasing workforce participation rates, and government subsidies through the Childcare Subsidy Scheme create a strong demand environment for well run centres. The financial challenge is that the investment required to establish, fit out, expand, or acquire a childcare centre is substantial, and the ongoing cost of maintaining compliance with the National Quality Framework adds to the financial management demands of running a centre. Here is what is available to childcare centre operators, how it works, and what you can realistically borrow. Childcare centres have a positive lending profile for lenders who understand the sector. Childcare subsidy payments create a stable and government backed revenue base, occupancy in quality centres is high, and the regulatory environment creates meaningful barriers to entry that protect established operators. Specialist lenders with early education or childcare experience will assess your application with appropriate context. Equipment finance is appropriate for purchasing learning resources, furniture, outdoor play equipment, kitchen equipment, and other capital items required for centre operation. The equipment is the security, rates are competitive, and the structure is often more tax effective than other forms of finance. For centres investing in outdoor environments, learning technology, or kitchen upgrades, equipment finance handles these purchases cleanly. For fit out costs, building a new centre, or acquiring an existing operation, secure business loans using property as collateral, provide access to larger amounts at lower interest rates. Childcare centre acquisitions are well understood by specialist lenders who factor in occupancy rates, approved places, and the quality of the centre's regulatory history. Unsecured business loans provide fast access to working capital for operational needs, staffing investment, compliance costs, marketing, or bridging cash flow gaps between childcare subsidy payment cycles and outgoing costs. You can borrow between $10,000 and $500,000 based on your centre revenue and bank statements, with approval in 24 to 48 hours. A business line of credit works well for childcare centres managing the week-to-week cash flow demands of a staffing-intensive operation. You draw what you need when costs arise, repay when CCS payments process, and only pay interest on the outstanding balance. How much you can borrow depends on your centre revenue, occupancy rates, trading history, and purpose of the finance. Centres with strong occupancy, clean financials, and a good regulatory compliance history access the most competitive terms. Applications take under 20 minutes online. A commercial finance broker with early education or childcare experience can identify the right lenders. Brokers are paid by the lender on settlement. Use the free business loan finder, reliable business tools to find which loan type suits your childcare centre. 6 questions, a clear recommendation, no credit check, and no obligation.